for clicking in. The Prince of Real Estate, Floyd L. Mills, here to talk to you just a little bit about mortgages. There's a lot of mortgages out here today, and the best thing to do is to make sure that you get the correct and right mortgage out here. Because a lot of times these banks will give you mortgages and loans on houses that it might seem right on paper or might seem agreeable on paper, and then they start talking to you about different mortgages like unconventional mortgages, which is a good mortgage, and then a conventional mortgage or fully amortized mortgage, which you won't have to worry about until years and years later after you pay off the mortgage anyway, or adjustable rate mortgages. Stay away from adjustable rate mortgages. But let me talk to you a little bit about, and then also there's a good mortgage, just fast forward a little bit. There's also a mortgage out there for people that's also 62 years and older. That is the best mortgage out there in the world, to my opinion. It's called the reverse mortgage plan. Those that are 62 years and older, I would highly recommend that you would get on that program. If you don't have your house you want to leave to, or you don't have any siblings or anything like that, or you do and don't want to leave the house to them or anything like that, I would highly recommend the reverse mortgage plan. I'll come back a little later, maybe on the next video, and I'll talk to you about the reverse mortgages. But the reverse mortgage is awesome. But let me talk to you a little bit about the unconventional mortgage. The unconventional mortgage is insured by the government, such as a VA loan or FHA, and those loans, they insure the loan or the mortgage 100%. Those are the best loans to get. As a matter of fact, the bank love those loans. If you go to the bank, instead of getting a conventional mortgage and you get an unconventional mortgage, they love those loans because you're insured. FHA will insure that loan. Fixed rate mortgage. Stay away from fixed rate mortgages. I'm sorry. Don't stay away from fixed rate mortgage. Fixed rate mortgage is what you want. Is what you want. You want a fixed rate mortgage. You want those. That means that if you have a mortgage at 6%, it can't go no higher than 6%. If anything, it'll go lower, but it can't go no higher than 6%. So that's what you want. You don't want a mortgage that's going to continue to fluctuate up and down. You don't want that mortgage. That's an adjustable rate mortgage. You don't want an adjustable rate mortgage. If they say, Floyd, we can give you an adjustable rate mortgage, and first thing I'm going to say is no. But they say, well, we can give you an adjustable rate mortgage with a 2% cap at 6% interest. Cool, I'll take that. So therefore, I'm going to explain to you what that is. That means if your rate is 6% with a 2% cap, that means they can't go no higher than what? 8%. That means if it goes higher than 8%, which it would never do because you got a 2% cap on it, that means that you can go no higher than 8%. No higher than that. Open-end mortgage. An open-end mortgage is basically a HELOC, which is a home equity line of credit. That's basically what a open-end mortgage is. It's a line of credit where the bank will give you credit on your equity on your home. That's what they do. They give you credit on your equity in your house. So basically, just say you got $100,000 in credit. Now, the way you figure out your credit is the difference between what the house is worth and how much you owe. So just say you bought your house at $50,000. And then you get it appraised at $150,000. So how much equity do you have in your house? $100,000 worth of equity. That's what you have in your home. So that's pretty good. I don't want this video to be too long, or I don't want to be too short, but I do want to give you more information. But again, this is a lot of people patience is not long. So I'm going to end this video right here with that. But I want to come back to you later on, and I want to talk about capital gains, deed of trust, purchase money mortgages, There's all kind of mortgages out there. A chattel mortgage. Talk to you a little bit more about conventional loans and different things like that. So I want to talk to you about that, but I will get back to you on that cause. The Prince of Real Estate, I'll get back with you, or mortgages, part 2. Talk to you soon. Thanks.